Well, the markets are trading at record highs, leaving plenty of investors wondering just how much room for growth is left in the rally. Let's get straight to David Lebovitz, global market strategist at JPMorgan Funds, for more analysis. And David, what do you make of these record levels? This keeps happening time after time.
So I think that when we look at where the equity market currently stands, it's clear that we have been around record levels for quite some time. But I think investors are still searching for that next big catalyst for whether the move is going to be up or down. I think that the volatility we've seen so far this year is indicative of the fact that investors are grasping at straws to an extent, trying to figure out whether the market is headed higher or whether we may be headed for a bit of a rollover.
All right, and what do you think that catalyst will be? Do you see this pattern of small record closes by a point or two continuing throughout the year?
I do. I think our base case for the rest of the year is more volatility, and it's going to be smaller moves like we've seen recently, which characterize the remainder of 2015.
All right, and for investors, though, we seem to be seeing a comeback in managed funds, but obviously index funds are better from a cost standpoint. What should investors be doing in terms of balancing index versus managed funds?
I think there's some real opportunity in actively managed funds right now. As we see sector return dispersion wider out, that means that the opportunity set for investors is getting larger. So I would expect that actively managed funds should continue to outperform in this higher volatility environment.
Okay, and looking forward towards sectors you like amid a possible correction, what are you looking at?
So we've continued to favor cyclicals over defensives. We like tech, we like consumer discretionary. I think those are going to be the big outperformers, particularly as we see wage growth pick up later this year.
All right, let's also talk about the Federal Reserve's looming policy shift. We have the minutes of the Fed's April meeting, of course, released Wednesday. First, when do you think the Fed will hike rates?
So our view is that the Fed will hike rates sometime this year. Our base case is September. I think the hurdle for a June hike is a little bit too high. July isn't out of the cards, but our base case is that a September hike is the most likely.
All right, and with that, do you think you guys will be buying up more banking stocks amid rising rates?
I think that financials should outperform as rates creep higher. Traditional banking, saving and lending should benefit from higher rates, so I would expect that financials get a nice tailwind from that.
All right, and going forward, your outlook for the rest of the year. We see the S&P 500 up about 3% so far this year. I mean, how much steam is left in this rally? It seems like some strategists are saying we may have seen half of the returns so far this year.
Yep, I think that we can still eke out a few more percent this year, but I think somewhere in the 5 to 7% range for 2015 returns is the most likely scenario.
All right, David Lebovitz from JPMorgan Funds, thanks very much for joining us.
Thanks for having me.
I'm Scott Gam, and you're watching The Street.